Hello to all my dear CA. I hope your studies are going great and they are on track. And today I am here to discuss the RTP that the institute has issued. So we are going to discuss all the questions of the RTP. Let's get into it. Kapoor Limited is a mid-sized listed manufacturing company incorporated in the year 2010 by R.D. Kapoor. Mr. Kapoor had two sons, Mr. Vineet and Mr. Aditya. Both Aditya and Vineet are working as directors in Kapoor Limited. Kapoor Limited has some compliance issues in the past. In 2016-17, the company issued redeemable preference shares, but later failed to pay dividend on them for some time in September 2018. The company fixed this by clearing all its loans and paying the pending dividend to the preference shareholders. After resolving these issues, the company proposed to issue new equity shares with differential rights. Okay, when company wants to issue differential rights shares and the company has already made a default in the payment of loans. So once the default is made good, the company has to wait for 5 years before it can issue preferential rights shares. As part of its broader capital raising strategy, the board of directors decided to issue three different types of securities: a rights issue of equity shares to the existing shareholders, a new class of preference shares offered exclusively to current equity shareholders, and a public issue of convertible debentures. So, for the rights issue, it prepares a simplified document omitting several disclosures required under Section 26(1). And for the new preference shares, they created a detailed prospectus but excluded certain financial reporting. But for the convertible debentures, they prepared a complete prospectus with all the sections requirement. Further, Miss Roshni, I'm so sorry, a shareholder owned 1500 partly paid up shares in the company. On 5th July 2024, she applied to transfer 500 of these shares to Mr. Bakshi. They are partly paid up equity shares. And she wants to transfer her shares to Mr. Bakshi, who didn't know about it. The company sent him a notice on 10th July, which he received on 12th July. Since Mr. Bakshi was abroad, he saw the notice only on 20th July. After realizing the shares have had unpaid amount, he sent an objection email on 24th July. It's within 2 weeks. However, the company went ahead with the transfer on 27 July. So, in case the shares refer to partly paid up shares and the instrument of transfer is deposited by the transferor, then the company has to send a notice to the transferee. And if the transferee rejects within 2 weeks, then they cannot register the transfer. However, the company went ahead with the transfer on. Okay, can the company actually do this? No. When the transferee has already rejected, this transfer should not take place. Saying his objection came too late. Did it come too late? No, it was within 2 weeks. According to the company's rules, the board can approve the transfer of partly paid up shares if they believe the buyer can pay the remaining amount in the future. Doesn't matter what the article says or whatever. When the law says that you have to wait for his objection for at least 2 weeks, he can object. That right is given by law. In another case, Mr. Varun, one of the shareholders of Kapoor Limited, is the legal representative of a deceased shareholder, Mr. Karthik. He had written an application to the company to transfer the shares in his name. But Mr. Varun did not receive any reply from the company. Mr. Varun went to the company office to inquire about the same. The company refused to transfer the share in his name as he is not registered member of the company. The legal heirs, even if they are not registered members, they have a right to get the shares transferred to someone else. For your information, the company's financial position is as follows: paid up free reserve securities, whatever. The board of directors approved a buyback proposal on 15 September to purchase 3 crore equity shares as rupees 60 per share. Okay, so 3 equity shares, no. So, what is the total? 20 crore shares are there, and you can do up to 25% of the equity. 25% of equity will be 5 crore. This is within the limit, correct? The company had previously conducted a buyback of 1 crore shares in August 23 during the financial year 23-24. The new buyback is planned for October 24, which falls in the financial year 24-25. Can you do? Yes, 1 year. The chief financial officer has confirmed that post buyback, the debt to capital ratio would remain within the limits and the shares are fully paid up. In the lights, choose the following. Since the default was made good in the financial year 2018-19, the company considered to issue the new equity shares with differential rights. According to the provisions, do you think the company is eligible to issue the shares for the financial year? No, they cannot. So, Yes, the company, no. No, the company is ineligible as the company needs to wait for 3 years. No, the answer is they have to wait for 5 years, right? Yes, the company can issue the shares. No, they cannot. No, the company must wait for 5 years. So the answer is D. According to the provision of the Companies Act, do you consider the company's action of affecting the transfer of partly paid up shares to Mr. Bakshi as valid? We already discussed it's not valid. So A and D though not possible. No, because the transferee did not give his explicit consent before the transfer. No, we give him a notice. If he does not reply within 2 weeks, 2 weeks will transfer. So no, because Bakshi made objection within 2 weeks. So this is the answer. According to the provision of the Companies Act, can the company deny transferring shares in Mr. Varun's name? And what is the company's obligation? Uh, can they deny transferring the shares in Varun's name? No, because the legal representative, even though he's not a registered member, he can still get the shares transferred to someone else, and it will be deemed to be a valid transfer as if he's a registered member. So yes is not possible. So A and D gone. So what is the answer? No, the legal representatives has a right to transfer even though he's not a registered. This is correct. No, the company can deny as his name. No, this is not correct. So the answer is B. Based on the buyback limitation under the provisions, do you think the proposed buyback is valid? It was within the limit, right? And because it is buyback of equity, we will consider 25% of equity shares, right? We will consider 25% of equity shares. So yes, the buyback is valid as the total amount is within 25% of, we don't, because it's buyback of equity, we will only consider the limit of paid up capital of equity, not free reserves. So the answer is yes, the buyback is valid as the number of shares is within, this is correct. The buyback is valid again, free reserves we don't consider, and option D is not correct. So yes, the buyback is valid as it is 25% of the paid up equity. The company had earlier made a buyback of 1 crore shares in August 23. Can it legally conduct another buyback in October? From August 23, we need a gap of 1 year. And once the gap of 1 year is over, can I buy back? Yes. Gap of 1 year is over? Yes. So B and C is not possible. A and D. D is not possible. We don't need any permission of tribunal. So yes, A. Suppose if Kapoor Limited's post buyback debt equity ratio would have exceeded 2:1, which of the following is correct? If it exceeds, right? If it exceeds, the buyback is not valid unless government has given a higher ratio. So buyback is still valid? No. Buyback will be invalid. This looks correct. The ratio applies? No, it applies to all companies, not correct. Is still valid as the act does not. Obviously, the act gives a limit. So it's B. Samyak Solutions Limited held its annual general meeting on 20th September to adopt the financial statement for the financial year ending 31st for the financial year ending 31st March 2024. However, due to lack of quorum, the meeting was adjourned and was finally held on 27 September 2024. What is the last date for filing the annual return with the registrar? So we file the annual return within 60 days from the day the meeting is concluded. The meeting was held on this, but it was concluded on this day. So 60 days from 27 September. Blue Leaf Limited, an Indian company with a total paid up share capital of 50 crore, has a wide base of shareholders, including a large number residing in the Middle East. Out of its total capital, 15 crore worth of shares are held by members residing in Kuwait. To facilitate better maintenance of records and communication with its overseas shareholders, the company decides to open a foreign register in Kuwait containing the name and particulars of those members and other security holders residing there. Can we maintain foreign registers? Yes. Under Section 88 and the rules, we can maintain. The foreign register is formally opened on November 1, 2024. Which of the following you have to inform the registrar the day you open it within 30 days from that day? So file a resolution passed by the board approving within 60 days. No, this is not correct. Send an intimation to the Ministry of External Affairs. No. File with the registrar of companies a notice within 30 days. This is correct. Apply to RBI. No. The answer is C. Miss Smriti, an Indian national, recently won 41 lakh in an international online lottery. Okay. Lottery income is prohibited, right? He now wishes to remit an equivalent of US $50,000 abroad to a foreign account using her lottery winnings. She approached her authorized dealer to request the foreign exchange for this purpose. What is the current correct position regarding her request? It's allowed, it's not allowed, it's not. So ABC is not correct because it's not allowed. The remittance is prohibited as it falls under the first schedule of the FEMA rules. Which what among the following could be considered as immovable property? The soil for making bricks, yes. Right to catch fish, yes. Right to drain water, no. Doors and windows of the house, yes. So it's 1, 2, and 4. So the answer is B. So moving forward to the descriptive questions, we are done with the MCQs. The first one, on 30th June 2023, Sunrise Infratech Limited raised secured deposits amounting to 160 crores from the public at an interest rate of 12% per annum, repayable after a period of 30 months. The company created charges within the prescribed time in favor. Okay, so we have to first calculate what how much amount has been done for the charge thing. 160 plus, sorry, 12% interest for 3 years, right? If I calculate just again, so this will come to 57.6 plus 160, which comes to 217.6, right? The company created a charge within the prescribed time in favor of the trustees for depositors, securing the deposits by creating charge over the following assets: land and building, plant and machinery, factory shed. Okay. In deposits, we saw it very clearly. Charge can be created on any assets, but not intangible assets, right? So here, the charge cannot be created on this. It can only be created on land and building, plant and machinery, factory shed, which is equal to 160 crores. But the charge total amount to be repayable is how much? 217.6 crore. So is the value of the assets enough to cover the charge amount, to cover the deposits and the interest? No. So you are required to examine the validity of the charge created considering the nature. So can we say it's not valid? Correct, because it does not cover the total amount of the deposits, right? So it is less than the amount of deposits, so it's not valid. The company Fateh Limited, engaged in the business of electronics manufacturing, has a paid up share capital of 12.5 crores and a shareholder base comprising 3,500 members. The company's equity shares are listed on a recognized stock exchange, and it has a history of strong shareholder participation in general meeting. On 10th May 25, the Board of Directors issued a notice convening the annual general meeting to be held on Saturday, 13 June 25 at 11 a.m. at the company's registered office in Mangalore for considering ordinary and special items of business, including approval of financial statement and appointment of new independent director. On the scheduled date, however, the required quorum was not present. Consequently, the meeting was adjourned to the same time and place on next Saturday. In connection with the meeting and its adjournment, the company's compliance officer has raised the following queries. If only two members are present at the adjourned meeting, will the meeting be validly held and its business transacted? Under Section 103, if the company has, okay, but the previous question was as per the rules and, as per the rules says what is the value of the charges. Anyway, coming back, as per Section 103, if the quorum is not present, the meeting will be adjourned to the next week, same day, same time. If at the adjourned meeting also quorum is not present, then the members present shall constitute the quorum. So the two members present, will it be a valid meeting and will the business transacted be valid? Yes. Assume that on 13th June, 16 members were present, but due to disorderly conduct by a few shareholders during the proceedings, the chairman exercised his discretion and adjourned the meeting to 20th June 25. On that day, only three members attended the adjourned meeting. Would such a meeting be valid in terms of quorum requirements? As per Section 103, when the meeting is adjourned due to lack of quorum, and at the adjourned meeting, the quorum is not present, the members present shall form the quorum. However, if the meeting is adjourned for any other reason, then at the adjourned meeting also quorum must be present. So in this case, would you still would the with such in terms of quorum? No, the meeting is not valid. Why? Because in this case, at the adjourned meeting, also quorum must be present. And if the quorum is not present, the meeting shall be adjourned again. Pridework Limited, a listed company engaged in the manufacturing and export of premium shoes and accessories, has been undergoing financial restructuring uh, uh, over the past few years. After several years of operational, after several years of operational losses and sluggish growth, the board recently appointed new production manager whose strategic improvements have helped to revive the company's margin and production efficiency. In light of the improved performance and renewed investors' confidence, the board of directors at its meeting held on 20th April resolved to recommend a final dividend of 50 lakh to its equity shareholders. A notable development at this would be the first dividend declaration in 8 years. The financial data available is as follows. Current year's profits, whatever, chalo. As the current year's profit alone are not sufficient to meet the proposed dividend. Okay, how much would be the dividend? The final dividend is of 50 lakhs. Current year's profit is obviously not sufficient. They plan to draw, the company plans to draw from free reserves as permitted. Examine whether the proposed dividend declaration is within the legal conditions. Okay. So the company has declared, so under section 123, can a company declare dividend out of its reserves? Yes, a company has a right to declare the dividend out of the reserves. As per the rules, three conditions have to be fulfilled whenever you declare dividend out of the reserves. The first is the rate of dividend should not be more than average of the past 3 years. This provision will not apply since in last 8 years we have not declared any dividend. The second is the amount to be drawn should not be more than one tenth of the paid up capital and free reserves. Let's find the amount to be drawn. 15 lakh, 16 lakh profit current years. How much is left? 34 lakh we will draw from free reserves, right? Now, what is the free reserves? So the second point is one tenth of paid up capital and free reserves. Paid up capital 680 plus 170, which comes to 850 lakhs, and one tenth is 85 lakh. So I can maximum withdraw is 85 lakh. I just want to withdraw 34 lakh. Is the second condition met? Yes, the second condition is also met. The third is average, that does not apply. The third condition is the balance in the reserves should not fall 15%. It should not fall below 15% of paid up capital. What is paid up capital? 680. What is 15% of 680? Okay, I have to calculate. I don't want to mess up and give a wrong figure here. So, what is 680 ka 15%? 102 lakhs should remain in the reserves, right? My total reserve is 170. I am going to withdraw 34 lakhs. So how much remains? 136 lakhs. Is it met? Yes. So is it justified? Yes. The company's decision to pay the dividend out of free reserves is justified. So we can say the decision of the company to pay dividend out of the reserves is justified. It's as per the laws. New Sales Private Limited, a company engaged in the business of trading heavy duty paper tapes used in industrial packaging, has seen consistent growth over the past 5 years. The company's turnover for the financial year crossed 130 crores with a net profit of 9.2 crores. During the during the same financial year, the company's long-serving CFO, Mr. Ram, retired due to prolonged health issues. Following his retirement, Mr. Sham, a qualified CA with 2 decades of experience in financial reporting, was appointed as the new CFO in March 2025. Upon assuming his duties and reviewing the company's past financial records and statutory filings, Mr. Sham noted certain material classifications, errors, and omissions in the audited financial statement for this year. Concerned about the potential implications of these discrepancies, Mr. Sham advised the board of directors of New Sales Private Limited to revise the financial statement. even though the financial statement had already been adopted by the shareholders and filed with the ROC. Okay, they want to revise the financial statement, and this is a voluntary revision. Voluntary revision is done under section 131. They have to make an application to the tribunal, right? So under section 131, they can go for a voluntary revision. So basically, voluntary revision is for section 129, where the financial statements, they have a doubt on financial statement, or when it is for board's report under section 134. It can be done for only up to 3 financial years. And once you have got and with the approval of the tribunal. And once you have got the approval of the tribunal, you must file a copy of the order with the ROC within 30 days. Pride Private Limited, a startup by a few qualified professionals, was incorporated in 2018. The company is booming and favoring the younger generation to work. The capital structure of the company is as follows. You can authorize capital and all, share premium. The company decided to issue 30%. One thing very important here, it's a startup. Okay? The company decided to issue 30% of its equity share capital as sweat equity. Generally, the limit of sweat equity is 25%, but if you're a startup, you can issue up to 50%. As sweat equity shares to a class of directors and permanent employees with the objective of motivating them and making them partners in the company's growth. The proposed sweat equity shares will be subject to a lock in period of 5 years. As per law, the lock in period is what? 3 years. Accordingly, the company passed a resolution in its general meeting authorized the issuing of 15 lakh sweat equity at a current market price of 25 per share to be issued for consideration of 5 per share to the identified class of directors and employees. In the light, whether the size of issue of sweat equity was appropriate? Yes, because in case of startups, you can do up to 50%. Whether lock in period was justifiable? No. As per law, the lock in period is 3 years. So, the maximum period of lock in can be 3 years. Moving on to the next question, Shubham Limited is the holding company of Weber Private Limited. As per the financial statement of Weber Private Limited for the financial year, its turnover was 1.80 crore and its paid up capital. Its turnover was 1.80 crore and its paid up capital was 80 lakh. So the board of directors want to avail the status of small company. Okay. To be a small company, your paid up capital should not exceed 4 crore. Turnover as per PL of the immediately preceding financial year should not exceed 40 crores. So the turnover is within limit. The paid up capital is also within limit. But Weber Private Limited is a subsidiary of Shubham Limited. And if you are a holding or a subsidiary, you cannot get the status of a what? Small company. However, the company secretary advised the board that it cannot be classified as a small company. With reference in the light, examine the correctness of the advice. So the company secretary was correct, because if a company is a holding or a subsidiary company, even if it fulfills the provisions, it will not get the status of a small company. Ravi and Neha, two entrepreneurs, plan to start a new LLP focused on AI based software development. They decided to name their LLP as Next Gen AI Innovations LLP. Before proceeding with the incorporation, they want to ensure that their chosen name is available and reserved. They apply to the registrar through the prescribed web based platform and pay the required fee. Describe the legal requirements as to the reservation of name. So, whenever an LLP wants to be incorporated with a name, the name should not be identical or resembling the name of any LLP or company or LLP or company or registered trademark. They must, or it should not be undesirable. For that name, they must apply in RUN LLP to the registrar. And once the name is allotted to them, this name is available for a period of 3. No person, so now moving on to General Clauses Act, no person shall be prosecuted and punished for the same offense more than once. Direct questions, I don't want to waste my time on this. If a person has committed an offense which is punishable under 2 acts, he can be punished under 1 act but not under both the acts, right? He can be punished under 1 act but not under both the. Also under Article 20, if a person has committed an offense, he cannot be punished under Article 20 of the Constitution. A person cannot be punished for the same offense twice. So he will be punished under any one but not both. Moving on to the next question, what is meant by beneficial construction in statutory interpretation? Under what circumstances the rule is applicable? Generally, This rule is applicable. It's not a strict rule of interpretation. And generally, this rule is applicable when one section of the public has not been, has not been fairly treated. So in that case, to treat that section of the public fairly, this rule has been applied. So basically, when this rule is generally applicable when a particular statute has more than one meaning, and to go for a fair meaning or a fair construction, we use the beneficial construction. Miss Pearl was an Indian citizen who got a job in a software company in US. She went to US and stayed there for 15 years. Okay, when she stayed there for 15 years, that means she's not a person resident in India. During her stay, she purchased a house in US for her residence. Can she do that? Yes. Under Section 6, if a person has acquired any property while he was a person resident outside India, he can continue to hold that property even if he comes back to India. Then, due to some personal issues, she moved back to India and joined a software company in India. As she had moved back to India, she let out her house in the US and deposited the rent in her account in the US. Advise whether she can purchase another house in US from her account in US. If any person derives any income from any property situated outside India, and that money is kept in the account outside India and utilized to purchase a property outside India, that is allowed. So here, because the money is kept in the US account and she is utilizing that money to purchase a house in US, that is permittive. So can she do that? Yes, it is absolutely valid. With this, we are done with the discussion of the RTP. Keep studying well, happy learning, and stay motivated. Thank you so much.